There we are. Good morning, everyone. Thank you for joining us today for Taxes Made Simple, avoiding common pitfalls and preparing for a profitable future. My name is Alyssa Pruitt, and I'm the Director of Coalition Resources here at Local First. Before we get started, I wanted to cover a quick some housekeeping notes. Zoom offers captions and translation options, which you can find in your Zoom controls. That's usually found on the bottom of your screen. So please let us know in the chat if you have any tech issues. We can help take care of you. We're also recording today's session. So as soon as today's session is over, within the next couple of days, I will add this to our local learning lab and send out the link so you can review. I'll also share it with any RSVPs. So if you happen to pop off early or if you weren't able to join us today, you'll have access to the link. I also wanted to share just a little bit, if you're new to Local First, we are a nonprofit organization dedicated to building a stronger, more resilient Arizona economy by supporting locally owned businesses like you. So through workshops like this, access to resources, and community-driven programs, we help entrepreneurs and small business owners thrive, grow, and make a lasting impact in our Arizona communities. Yes. So without further ado, I'm really excited to introduce our speaker, Aldo Aprile, and he's the owner and founder of Aprile CPA. He is a financial expert specializing in tax planning and strategy, helping business owners navigate tax season, minimize liabilities, and set themselves up for financial success. In this session, he'll talk a little bit about common tax pitfalls, how to maximize deductions, and some key strategies to stay ahead during this wonderful time of year, tax season. So in all ways that are practical and approachable. Throughout Aldo's presentation, you're welcome to ask questions in the chat feature, and just know that at the end we will have a Q&A session. So again, you can do questions in the chat and we'll make sure they get answered. Or if you're feeling it, please feel free to come off camera at the end and ask questions, and we will answer those live. So without further ado, Aldo, I'll turn it over to you. Thank you so much, Aldo.
Thank you, Elisa. Thank you guys for being here. I know who wants to talk about taxes at 9 o'clock in the morning, the day before Valentine's Day? Us, of course, us. So there is no secret. It's the most wonderful time of the year, as I call it, tax season, right? And usually people start remembering, well, shoot, am I doing everything I need to do in order to take care of my taxes, especially if you're a new business owner? So I want to give you some practical, actionable tips here that's going to make your life much simpler when talking about taxes, and maybe a little bit on cash flow as well. Okay. So as Elisa stated, she did a great intro, so I don't really have to spend a lot of time in that. Aldo Aprilia, I'm a CPA. I've been licensed in Arizona for 20 years. I am the founder and CEO of Aprilia CPA PLC, specializing in tax planning for people that are just paying taxes through the nose. I help them figure out ways on how to minimize your tax liability. I'm in social media. If you guys want to follow me, I'm under Aprile CPA. You can find me on Instagram, Facebook, LinkedIn. I'm too old for TikTok. So if you want to follow me, it's all good. And I'm originally from Peru. And I'm excited to help here. I've been an entrepreneur myself. I grew up in a family of entrepreneurs. So I truly appreciate the time and effort that you guys do taking the risk to start something on your own. I know it's rewarding, but also it ain't easy, right? So again, I just want to do a disclaimer. This is for informational purposes only. Every situation is unique. So for specific advice, I urge you to contact a tax professional or somebody who can help you with finances in regards to your specific situation. Okay, so with that out of the way, let's get rolling. So let's talk about the 7 common pitfalls to avoid in your taxes. This is a quick list here. Number 1 is mixing personal and business expenses. Number 2 is failing to keep a proper records of your business vehicle use. Number 3 is meals and entertainment. There is a lot of TikTok videos about that and a lot of misinformation as well. So I want to give you some clarity on that. Misclassification of workers. What is an employee? What is an independent contractor? Another one is failing to make estimated tax payments. Another one is neglecting retirement contributions for tax deductions or reductions, sorry. And last one is overlooking key tax deductions and credits. So we have to a lot to cover. I welcome your questions and we'll be more than happy to answer those at the end of the presentation. Okay, so all right, so keep personal and business activities separate. Who has in the past, in this past year, or even currently now, using your personal and business expenses, mixing it all together? Show of hands if anybody is that has done it. I've done it myself. You know, sometimes you need money to pay a bill. I don't have time to have to transfer that to my business account. Let's just pay it and we'll figure it out later. Well, life has shown me, myself as an entrepreneur, but also as a tax professional, that does not help you. And here is the reason why. One is from a legal standpoint. Again, I'm not an attorney, nor do I play one on TV. But you do not want to pierce a corporate veil that there is, from your LLC, from legal purposes to your personal stuff. That's why you want to keep things separate. Personal, business is business. Do all of you have a business bank account already? Show of hands. Rock on. So you're doing a great job. Do that. If you don't, I know local First Arizona has their favorite credit unions and local banks. I'm sure they have a wonderful list that they can provide to you and contacts so you can open up. And the reason why, from an accounting tax standpoint, is number one, if you do not have everything compartmentalized in business, what I've seen in the past is say, well, how much are you making? And people say, well, I don't know. I don't know what my profit is. I have payments coming in from my personal account for this type of business expense. I am paying my mortgage out of my business account, and it becomes a cluster, you know what. So at the end of the day, you don't even know if you're making money or the money that you think you're making. But number two, personally, I've seen this many times in which people forget their business deductions because they put them on a personal bank account. I cannot tell you the amount of times, I bought X, Y, Z, this equipment on a personal credit card, and I completely forgot to pay to take it as a deduction on my tax returns. Now you're paying higher taxes, which nobody wants to do. But two, if this tax deduction is significant enough, now you have to go back and do an amended return, which are a royal pain. So you want to avoid that. My other suggestion is get a credit card for the business and pay it off every month so you don't have to pay interest on that. And avoid using your debit card. I tell this to everybody, even though it's not tax related. And the reason why is because let's say your debit card gets compromised online, or when you go to the gas station, I'm sure you see those videos where they put something to extract your information. Well, now they're messing with your money. When you're using a credit card, it's the bank's money and they can figure it out later. I've seen instances in which the bank will pay you back, but in the meanwhile, your account is going overdrawn, you're getting in trouble with your vendors or whatnot, so you want to avoid that completely. As a reminder, when now people ask me, well, okay, so how do I pay my personal expenses? How do I pay myself as an individual? Well, I would guess that a lot of you are sole proprietors, Schedule C filers. Would that be an accurate assessment? Show of hands. Awesome. And if that's the case, you do not put yourself in payroll. So if you're doing that, stop doing it. The IRS does not want to see that. Actually, if you're a Schedule C filer, what you're supposed to do is pay yourself what is called through business owner's draws. And what that is nothing more than, let's say you have your business checking account. You can do a transfer, you can write a check to your personal account, and from there you can pay your personal expenses or whatnot. Now, let's say, for example, you need to fund more money to your business account, right? It's like, I cannot cover this expense from my business account. You do the same thing. You transfer money from your personal account to your business account, and there was like an owner contribution, and that's how you look at it. Now, these transactions, money coming from your personal account to your business account, is not considered sales or revenue. Now, at the same time, money transferred from your business account to your personal account is not an expense and it's not deductible. So there is no tax implications in that matter. There are some instances where you have an S corporation or a C corp where that's going to be treated different, but most of you that have a Schedule C filings, you're going to be okay. Oh, by the way, the Schedule C filing or form is part of your personal tax return, which is the 1040, which is due on April 15th. Okay. Now, if you are an S corp, is anybody here an S corp? No one? I see.
Yes,
Well,
yes, we do have one
case.
expert. Yep.
All right, just in case, I see that now. If you're an S corporation, you're required to pay yourself a reasonable salary, right? But let's say, for example, you need to get extra funds or whatnot from your business account. You can also take a business owner's draw. So you have the two options with an S corporation. So remember that. Okay. All right. Number two, keep track of your vehicle expenses, mileage. People talk about mileage or whatnot. And this is a great deduction, but I just wanted to let you know a couple things. Number one, you can either take actual expenses or mileage, but you cannot take both. So please remember that. And if you're going to keep track of your mileage, you need to keep a log. You know, again, at the date of travel, starting and ending locations, the purpose of the trip, and the total miles driven. Sounds like a lot of work, and sometimes it is. So if you want to get an app, do it. If you want to do a piece of paper, a spreadsheet, do it. The most important thing is that you're consistent about it. Now, I hear people say, I want to ask them, well, is this vehicle used for personal use? Do you use it to, run your personal errands and take your kids to school or whatnot? If that's the case, the personal travel that you have is not a business deduction. It's not, it's not either 100% or zero. It could be a mixture of both. Okay. And again, now people tell me, well, I have a vehicle wrap in my business, so therefore it should be business. No, that's not the case. It has to be a business purpose when you're driving that. So you want to compartmentalize business and personal driving. And, again, keep track of that to make your life easier, because if you get audited, that's one of the key points where they're going to look at. They're going to look at for support and something that actually makes sense. But just having a vehicle wrap or a sign on your car door, it does not make it 100% use when you're running personal expenses also. Now, if you have an office and let's say you drive from home to your office or workplace, a shop or whatever it may be, a restaurant, the mileage between your home and the restaurant, office, shop does not count as business expenses. It's what is called commuting, which is a personal expense, as if you had a job, right? If you got a normal W-2 job, you are not gonna, it's not an expense, so treat it as such. Now, if you have a home office, you work at your house, and I'm sure a lot of people like you work out of the house, and that's your home office, that's your primary business location, and you need to go to a client's office or a networking event with Local First Arizona, that is business mileage. So make sure on that to keep track of that accordingly. Okay, so again, it's kind of finicky or whatnot, but again, the rule of thumb that I use is this business related? Am I visiting a client? Am I attending training and networking events? Something that is specific to business. All right, number three. This is a favorite TikToker's paradise here, where they tell you that even your dog meals are deductible, right? So the general rule of thumb is standard meal deduction is 50%. And that's usually you take a client out, that's normally what it is. So let's say, for example, it's a networking event. You take, let's say Vanessa and I go out for coffee or whatnot. That's networking. That's usually 50% deduction. Entertainment is not tax deductible. It's 0%, right? So, but here's the kicker. Let's say, for example, I have a client and we're gonna go to spring training, see the D-backs or whatnot. The tickets that I buy for the event are not tax deductible. However, the meals and beverages that I buy there are deductible of 50%. So let's say if you buy a package deal or whatnot, try to break it down so at least it shows the meals separate than the actual ticket expenses. Now, I'm sure you've seen the videos where like, oh, you can deduct 100% of your meals. That is true, but this is for very specific events. Usually, it's more related to, let's say, if you have employees, right? And you want to host a company-wide event that is not discriminatory, meaning, let's say, again, you take the whole office or the whole group to a spring training or whatnot. Well, now the tickets and the food and everything else is deductible for that specific event. A Christmas party or a holiday party, same deal, right? Some type of team building event that qualifies as well. Now, if you are an S corporation or you're the only employee of the company, well, I'm my own employee, so I want to go out to the ballpark and that should be covered. Unfortunately, that's not the case. So that's not gonna fly. It's for the benefit of the employees, and because you're an owner as well, that takes you out of the equation, unfortunately. Okay. Another one, number 4, is misclassification of workers. So I always hear people say, I have a 1099 employee, or I am a 1099 employee. There is no such a thing. You're either a contractor, which is a 1099 person, or an employee. And you know, I have someone working for me that is a contractor 1099 or an employee. Now, why is this important, right? People say, well, you know, I put everybody as a contractor. That way we save money on payroll taxes or whatnot. Well, the IRS doesn't see it that way, right? If you get audited or whatnot, and they determine that the actual person that is working for you should have been considered an employee, then they're going to be asking, well, what about Social Security and Medicare and all those taxes you were supposed to pay? It's, you know, they're going to ask you to reclassify that, and those are hefty penalties, and the back taxes you owe on that. So obviously the IRS makes it easier. There's no specific chart or whatnot. So it's kind of like a self-test that you need to make. Is, you know, there is three points that they look at. It's the behavioral control. It's like, who controls the work? Meaning, and I usually say, right, the easy example is a restaurant. So you got a cook coming in for you. So who's controlling the work? Well, in that instance, perhaps you, as the restaurant owner, you're controlling the work because you tell them when to show up. You give them all the tools, you give them the ingredients, everything. All they have to do is show up within that lot of time and perform the menus that you have decided they have to cook, the dishes that they do that. So they don't really have a lot of decision making on that, right? Now, as a difference is, let's say you hire somebody to do the catering for you. I mean, you choose the menu or whatnot, but they choose how they're going to make it, who's going to make it, how they're going to prepare it, and when they're going to prepare it. They don't have to care about delivering it. Or another person like myself, right? I'm a CPA. You hire me for my expertise and my services, but you don't take how I prepare your taxes. Now, financial control is who controls the money. Now, if you got somebody on an hourly rate that, again, you know, they show up for a specific times to do the same work under your direction, one can make the argument that this person is an employee because it doesn't matter what the outcome of the equation is. They're still going to get paid. There is no risk for them to lose money, right? So again, going back to the restaurant, you pay that cook in the kitchen and you pay them, I don't know, $20 an hour. Well, if one person shows up or 50 people show up, you're still getting paid $20 an hour. So it doesn't matter, you know, whether you make money or don't, they're still going to collect your money. Simple as that. In which if you are your own food vendor or one of your contractor, again, you buy permits, all the food supplies, all the stuff like that. And if people don't buy from you, then you're losing money. So that's more of a contract, right? And if there is a relationship type, is there benefits? Is there time off? Is there holiday pay or whatnot? Is there a contract? So if you don't have any of that, more than likely that person is going to be a contractor. I mean, my clients unfortunately don't pay time off for me. that's on me. They just pay my fees, and I have to figure out how, what my benefits are going to be like, my days off and whatnot. So when you look at people that are working for you, make sure that you're at least taking a look at this test and make the best decision for you guys. Okay. Now, number five is failing to make estimated tax payments. So this is sometimes not fun because, again, you are go, 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 go. You're trying to make money. Sometimes cash flow is tight and you don't make your estimated quarterly payments as required by the IRS. You see the dates, the due dates there. The next one is going to be April 15th. So what happens if you don't make these payments? Well, the IRS doesn't like it. They're gonna, when you file your taxes, they're gonna charge you with an underpayment. And again, so my suggest, and again, people don't like it because then you get a big tax bill if you're profitable that year, all in one shot, and that's kind of gonna mess up your cash flow, right? So to avoid the penalties, you can either pay. Let's say this is your first 2024 was the first year of you doing business. You can go back to 2023 and see how much you paid in taxes. It's 90% of last year's tax liability, or it would be 2024 to 25. Sorry. Now, if you make more, um, or you can pay 100% of what you project tax liability it is. If you make too much money, over $150,000, so that payment is 110%. So again, try to make those quarterly payments. It's going to help you with your cash flow. And number two, minimize those penalties. Now, if you were not able to do it or whatnot, the world's not going to come to an end. You're going to get assessed a penalty fees. And again, there's a calculation done by the IRS. They're not extreme, but still, who wants to pay penalties if you can avoid it, right? Number 6 is neglecting retirement contributions for tax reductions. And I don't call it tax savings because really, when you contribute to a traditional IRA or 401k, it's not that you're not paying taxes. You're saving taxes now. You're reducing your taxes now. But whenever you take the money out, you're going to pay taxes. So it's not a question of whether you're getting taxed or not. It's when you're getting taxed. So that's the conversation. So my suggestion is always looking at what does my tax situation look like this year? Especially you had a very successful year. You're in that 35, percent tax bracket. That might help you a lot more than if this was your first year and you made not even have a profit, right? Maybe that's not the right time to contribute to a traditional 401k, but maybe time to contribute to a Roth IRA or traditional 401k because your taxes were so low. So and just real quick, just to make sure, traditional contributions to your retirement plan means that you are not paying any taxes now, you're going to pay in the future. Roth contributions is the opposite. So you pay your taxes now, but when you take the money out of the retirement fund, there are no taxes to be paid. So again, I'm a big fan of the Roth accounts because especially in your low tax years, you can make the contributions. And then if your investments take off, well, all that money at the end of the day, you are going to pay 0% of those taxes, which is great, I believe. So definitely keep that in mind. You're still able to contribute to your traditional or Roth IRAs for 2024 retroactively. So if that's something that, it's something that would interest you, you can still do it through April 15th. My suggestion is always take a look at what your tax bill is going to look like and make that decision then. Okay. Now, if you want to do a solo 401k as a small business owner, or you have an employee or whatnot, for 2024, everything is done. Unfortunately, that ended on December 31st of last year. However, you're going to start for 2025. That's something that's going to interest you. Okay, so there are certain income limits for deductions on the contributions to IRA after a certain income limit, as you see on the table. that's not going to be deductible. So again, watch out for those limits. Make sure you still qualify for the deduction. That's what you want to do. All right. And I also show some contribution limits for this year, $7,500 for your traditional Roth IRA right here. So, and again, if you're older or 50, which I'm getting close to, not fun, but at least the government tells you you can do more catch-up contributions. That's the only redeeming thing, I guess, going up for me when I hit that 50 mark. HSA contributions. If you have a qualifying high deductible health insurance plan, this is something you want to take a look into. Okay, so HSA stands for Health Savings Accounts. I love this because you pay zero taxes contributing, and when you take the money out, you pay zero taxes. And again, this is only if you use the funds for qualifying medical expenses. But this is wonderful. So you really pay no taxes on the front or the back end. So you're able to look into that. Definitely, I encourage you to take a look at those details. Maybe talk to your financial advisor, or you work for a company as well. You know, your business is a side hustle at this point in time. Look into contribute to your HSA. In some instances, you can still contribute through April 15th of this year or 2024. So look into that. That could be another thing that can help you reduce your taxes this year. Okay?
Aldo, I'll give you your
Yeah.
5-minute warning. 5 minutes.
All right. Well, this is where the fun begins. Number 7. Oh, I don't know why I have HSA contributions. Ignore that. Overlooking key tax deductions and credits. So if you work out of the house, right? You have a home office. I see plenty of people missed out on that. So there is a home office deduction. It's not a lot of money. There is actual expenses versus a standard deduction. In most cases, people don't really have the time to track, what's the interest on my mortgage payment, depreciation, blah, 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 blah. So the IRS has made something very standard and easy for you. $5 per square foot, up to 300 square feet. So the max is 1,500 bucks. Now there is a caveat. You need to have that space, like a room or a studio or something like that, completely dedicated to your business, right? That's basically what it is. That's your business, and that's all you got going on in that room. Startup costs. If you're a new business owner, so let's say you started in 2024 and you didn't get any revenue, you only had, you spend money on your website, marketing, design, attorneys, blah, 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 blah. You can still file your Schedule C and claim those losses to offset maybe a W2 income you have. So if you look into that, don't miss out on those deductions. Health insurance premiums, they're also tax deductible. It's what is called self-employment health insurance. There is some rules and things that you need to look into, but if that's what you pay, you want to look into that to see if you qualify for that deduction. Continuing education, you can also deduct. Again, you have to meet certain requirements, but if you're doing some kind of training to improve yourself or your team, that may be tax deductible. Business related subscriptions, your Canvas, your Zooms, your all those type of subscriptions, your QuickBooks Online, all these things, any subscription that is related to you got it because of your business is tax deductible. Okay. Depreciation. If you have equipment, don't forget about depreciation. Again, we talked about retirement plan contributions, but I want to talk a little bit longer about depreciation. Section 179, Section 179D, and bonus depreciation. Remember, when you take depreciation, it has to be recaptured when you sell the asset. So they help you now, but later you have to recapture some of that. So Section 179, if you guys own equipment or just purchase and put it in place, your maximum deduction is $1,160,000 for this year. That's big money. Make sure you're looking into this deduction, but also figure out the best strategy to maximize these type of deductions, okay? There is also some deductions that are more for energy efficient improvements called the 179D as in David. Again, if there are certain improvements that you made to your commercial space, this is something you want to talk to your tax professional about. Bonus depreciation. This is if, let's say, you used up or your 179 depreciation at $1,160,000. If you still got some left over, you may be able to grab some bonus depreciation in there. This year is up to 40% of the value of the item that you purchased. There is a retirement tax plan credit. If you have employees, the IRS wants to help you cover that cost up to $5,000. This is only for employees that you have. If you want to start your own solo 401k, that's not going to apply to that. So look into that. There's additional credits as well. So look into it. If you have employees, if you haven't done it last year, but you're considering doing it for 2025, you should definitely look into starting a plan. That's the incentive that the government wants to give you to cover your expenses, and also matching contributions, or help you with a credit of $1,000 per person for matching contributions to every employee that you give that to. Again, there are certain requirements or whatnot. It has to be a small business under 100 employees, but if that makes sense to you, I would definitely look into it for this year. Okay. And finally, I have to talk about Arizona tax credits. Hopefully you're all aware of this, but basically the state of Arizona, the Arizona Department of Revenue, gives you guys the power to direct how your Arizona tax dollars are being spent when filing your income taxes, your Arizona 140. You have what is called a QCO, Qualified Charter Organization, which, by the way, Local First Foundation is part of that list, if I'm not mistaken. So if that you want to support them that as well, and really not costing you any money, that would be a great option for you guys. There's also qualified foster care organizations. That's a great option. Private SD organizations. I think Jessica's here, maybe. Shout out to her if that's the case. But again, if you want to help private organizations that provide private education, that's a great option. And also, finally, there is also public school tax credits. My wife is a school teacher, so we always donate to the school up to $400 married family jointly. If you have kids in schools, nieces, nephews, or you just want to help out the school districts, we know sometimes they don't get all the money they need. This could be a great option to do that. Remember, guys, this is a tax credit that is non-refundable, which means is that you have to have taxable income and pay taxes on your Arizona income tax. But that doesn't mean like, oh, I'm gonna get a refund or I owe money at the end of the year. Is you look at, I want to say line 46. My memory is fuzzy right now. Is look at what the taxes are before your withholdings and payments. That's really what that we base the tax credit on. Okay. So look at that. Talk to your tax professional about it. You still have till April 15th to make those donations retroactive to 2024. So if you're going to owe taxes anyway, and you want to tell the government how to spend the money, this is your opportunity. Let's see. No, that's. So I know this was a lot of information. Hopefully this was valuable to you guys. It's been a pleasure again. I'm on social media, LinkedIn, Facebook, Instagram. I'm too old for TikTok, and X, I'm just too lazy to set up that account. So if you want to follow me at Aprilia CPA, I'm going to be throwing tax tips or information or whatnot. So thank you guys, and we're ready for questions and answers, I think.
Yes, fantastic. Thank you so much, Aldo. Much appreciated. And I think we did maybe have a couple questions earlier. I just want to make sure, Esther, did you get your question answered about, I think it's travel between two offices? I think Esther was asking about earlier. Esther, did you get that answered?
Well, between two offices, that's business related. So let's say, for example, right, you have an office and then you have a second location, or let's say you have two restaurants, right? So you go to one location, and the trip between location one and location two of your business, that's a business expense.
What about, I do telehealth one day a week from home. That's my home office. And then I have an office. I'm a psychologist, so then I have an office where I see people live. So uh, if I do the whole day at home,
Mm-hmm.
it does then the next day when I go to the office, does that count for mileage or not?
Oh, that's a tough one. So, okay, so where do you run your business out of? Like, where is your headquarters?
Well, in Tempe,
Uh-huh.
and and then my home office is in Queen Creek where I live.
Right, but which one is your main business location?
I would say probably the Tempe one.
So is that home or the
No, that's
space?
my office. That's my office.
Okay, so then the trip from the home to the office is still commute, will then be a business expense.
It would be,
Would
yes,
not,
would
would
not.
not.
Okay,
Mhm.
thank you.
Of course.
Thank you, Esther. Good question. And Angela, you had a question? I think you're still on mute.
Okay, can you guys hear me?
There we go. Yep.
Okay, so I'm a hairstylist and I work from my home in my apartment. And I know
Mm-hmm.
you mentioned the tip about the $5 per square footage. Would that be an issue because I'm in like a leasing property versus, if I were in a house or a studio? Can I still do
Yeah,
that? Because I work from I created a space. It's
right,
conducive for my business,
right,
but
right, right.
like it's not like, a salon type of space. I made it for me.
No, I got it. So it's just dedicated space to what you're doing, but the
Yeah,
difference is you're leasing. You don't own the
right.
home, isn't it? Okay.
I'm in an
That's a
apartment.
good
Yeah.
that's a good question. My first reaction would say, let me get back to you on that. So if you
Okay.
wanna if you wanna shoot your contact information, I'll double check and get back to you, Angela.
Good
Okay. You want to put
question.
it in the chat?
Yeah, good question,
Yeah.
Angela. And I'll take this down too and make sure that we get back to
Okay.
you.
Thank you
Yeah,
so much.
Yeah.
because I can see it both ways, but I just don't
Hmm.
right now. I don't recall right now.
Okay.
And you're working out?
I know.
Yes, I am.
So inspiring to us today.
Oh,
Yeah, I should be doing the
thank
same.
you. It's
Double
only day
duty.
3, so
Rock on. Good for you.
I love it.
thank you. Appreciate
Keep
it.
on those New Year's resolutions. Good morning, Dr. Michelle. I saw you had a question in the chat as well, but did you want to come off mute and ask?
Yeah, thank you so much. So it's the same question. So good morning, everyone, and good morning. I had a service as my business, but I'm adding an actual product now,
Mhm.
and I'm wondering if I have to charge Arizona tax or when people purchase the product online. I'm selling it on Etsy.
Okay, that's a really good question, right? Now, basically, sales tax or transaction privilege tax, you don't have to collect or pay on services provided. But when you're selling products, yes, you have to collect Arizona sales tax. Now, are you selling like for the whole country, just Arizona? How is that looking?
So for the whole country, and then eventually I will be selling internationally on
Okay.
Amazon. But for now, I'm just doing Amazon and Etsy for the whole country.
Right. And again, that's honestly like countrywide retail is not my forte.
Okay.
There is some sales tax implications when you're doing it to other states or whatnot. There are some nexus limits or whatnot, so that's something you want to take a look at. Hold on one second. Let me see if I can pull a resource here that might be of help. Of
Thank you so much.
Thank
course.
you, Aldo. It makes me think of the beginning where you were sharing every situation is unique. And I know, yeah, with businesses, just unique situations.
Right, right, right. And that's not my forte, for better or for worse. But this firm helps a lot. Let me put it on the chat here, if I can find this chat.
Vanessa
So,
was in the chat as well that the beauty of Etsy is you can add the sales tax for Arizona through their platform.
right. So Avalara is a service. I'm not affiliated with them, although I should be, so I can get a commission or something. But check them out. They help people navigate your situation, right? Like e-commerce and selling between states or whatnot, and navigate those sales tax issues. I know that you don't have to collect or pay up to you hit certain thresholds because it just becomes cumbersome, especially for people just getting started, right? So that's something you want to, that would be my first advice. Take a look at Avalara. They have lots of information in regards to people just in your situation that want to sell products online to the whole country and even overseas. So that would be my first stop. And I think they are specialized in helping people in your situation.
Thank you so much.
Rock on. Thanks, Aldo.
Happy to
And
help.
Elizabeth, did you have a question?
Yes, I have two actually, and a quick comment. The first question is regarding the vehicle wrap. You indicated that doesn't make the car tax deductible, but does the wrap itself, as part of advertising and
Yes.
a cost, is that
Yes.
deductible?
Absolutely. Well, yes, correct. And that's what it is, right? The wrap itself is marketing. And if you were not running your business, you wouldn't put a wrap just for giggles, right?
Right.
You're doing a specific, it's a billboard for all purposes intended. So yes, 100%.
Okay, right on. The second one is regarding the deferred compensation, the Roth and the 401k.
Yeah.
There's different limits. So the pre-tax one gives you the opportunity to save more, right? Because the limit was like 24,000. Post-tax, it was only 8,000. Can you do both?
You can, well, the 401k limits are going to be the same, whether it's going to be traditional or Roth. So you can, and again, you don't have to put everything on traditional. You don't have to put everything on Roth, depending again what kind of plan you get. The only thing is you cannot go over the limit, the total limit.
Yeah, so Roth is 8,000, and then the
Okay.
and then 401k was like 24,000.
All right, hang on. Let me pull up my. Did I have that information? I'm sure I did.
Yeah, it was a little small to read, but if you see what the limits are, there's a catch up, and they did it by age bracket. So for this year, the contribution limit for the traditional Roth or IRA was 7,500.
Right.
Then 85. But then look at the 401k, the regular one, it's 24,000.
I see what you're saying. Yeah. So if you qualify, you can do both. You can do the IRA and the 401k.
Right, because the IRA, you see, is less money that you could put away, right? They're maxing you out at 8,000. So if you want to put more, you can do the both combined. So technically, you could take the both to the max.
You could, as long as it makes sense, right? So again, that's when you talk to your financial advisor and your tax professional to do that. But yeah, you could do that. Absolutely. And sometimes, especially as you're getting started in your business, what's cool about it, let's say, for example, right now for 2024, you could not start a 401k retroactive, but you can still contribute to your IRA for 2024. So what sometimes people do is like, well, shoot, I missed out on the 401k for 2024. I can still contribute the monies for the IRA 2024, and then let's figure out what that looks like for 2024 and do a combo if the income makes sense for you.
Okay. Thank you. And then lastly, and Alyssa, I may get with you to do a class myself. I just want to clarify in the 1099, I'm a payroll professional, right? So know that the IRS does have a test. It used to be 5 questions. Now it's 10. And my favorite question is question number 5. They actually ask, what do you think? What do you think they are? Do you think they're a contractor or do you think they're employed?
Elizabeth, how are you? I just
Hi,
remembered you.
It's great to see you again. I know I met you 20 years ago.
Well, we'll have to catch up.
Yes, we will. But I do want you to know, as you're out there and as S-Corp people, that there is a test. You go to irs.gov and you really want to take a look at that, because that is a critical question. Aldo's right about control of profit and loss. A true contractor, you give them a job, and if it takes them 1 day or 10 days, that's up to them. So they control their profit and loss, saying, hey, I can make $1,000 in a day, or I could take 2 weeks to do this job. So that's where the difference is. So thank you. I appreciate you answering the questions.
Thank you so much for joining us today. Appreciate it.
Thank you.
Anything else today?
I have one more
Have some
question.
good brains on this call.
I just want to mention, thank you so much, Aldo, for doing this. Such valuable information. Just quick story. My father is about to retire, and for years with this business, he always wanted to show the minimum to Social Security, show the minimum because he paid less taxes. What ended up happening was that now that he's looking at retirement, he doesn't have enough in Social Security because he was an entrepreneur for so long, for 20 plus years, that Social Security doesn't show much for him to be able to retire. So even at his age, what we decided to do is to do the Roth IRA and to do a 401k and start contributing it as much as possible in order to deduct overall his business expenses, even though he's at an older age now, but you're still able to do it and catch up.
Right. And that's a great comment, Vanessa. And I'll add up to, and I've seen this where people are aggressively putting deductions that really they're not deductions on their taxes, so they pay less taxes. But what I've seen is now when it comes down for them to buy a house, to buy a vehicle, to get a business loan, they are not bankable. So what happens now, it just becomes very stressful. I've seen people actually miss out on opportunities just because they don't have the financing available. And I would say you're gonna pay the piper some way or another. Just make sure what you understand, what it is, because sometimes taking these shortcuts and taking a risk of getting audited and get busted for it, you're also doing yourself a disservice when you're looking at financing options down the line and in the future, which the worst case scenarios I've seen is people just not be able to get finance. Like, say, well, I make this much money in cash, but my taxes say this. Well, taxes are going to be the ones the banker is going to be looking at. I mean, there is alternative financing, but again, it's going to be much more expensive than your conventional banking.
And we do have a couple more questions. Lily was asking, and I think this is more to Elizabeth, can we add the link to that IRS test? And I did find a couple links, but not necessarily to the test itself. So Elizabeth, I don't know if you could share that in the chat. And then Rachel has a question. I own an arcade, and a few people put 1 or 2 pinball machines in her arcade. She takes care of the maintenance and all expenses related to the machines and splits the coin drop. Are those 1099 employees?
All right. So what do you mean when you say flip the coins? I guess.
So I guess they split the money made off the machines. Essentially, is what she is saying. So she houses their pinball machines. She takes care of the maintenance, all expenses of machines, and then they split the money from those machines. Are they 1099 employees who own the machines? I think is what Rachel's asking. Am I getting that right, Rachel?
That's a really good question. I want to go to the arcade and play for research and development, number one. So the way it looks to me is you are, again, not 1099 employee, right? You're an employee or a 1099 contractor. Definitely want to get that language right. I just, sorry to be a pain, but people use that term a lot. But getting back to that is, basically you're renting out space to that person that's providing. So they come to you, you're giving them a space, you provide the power, and you basically keep an eye on that, right? And they pay you with 50% of the proceeds of whatever they get, right? So in that instance, I would be inclined to say that if there's going to be a 1099 issued, would be from them to you, the arcade business owner. Because who opens up the box? Is that them or you?
Rachel says she opens it.
Okay. So the agreement sounds like this, that you, Rachel, are renting out. You're bringing them out, and then you share the split instead of making a payment. That's what it sounds more like. So you're leasing it. Yeah, that's what it feels like then. Then you will have to issue a 1099 miscellaneous or the rental.
So that's what it sounds like, more of the rental of a space. Yep, and Rachel takes care of 100% of everything else.
Yeah. So no, so basically she is renting the equipment and her payment is 50% of the proceeds.
So
so
yeah, it doesn't sound like employees there.
no, there's definitely not an employee. You're renting a piece of equipment, and the agreement is you are the rental amount that Rachel is paying is rent. You're renting equipment.
Thank you. Aldo, Esther is asking, can a new computer be deducted? It's needed for business, but it's also used for personal.
Yeah. And again, I'm assuming is 80% business, 20% of something minimal, the minimus, right? That is for personal use. Yeah. Now, if it's the other way around, right, it's different. But if it's mostly business or whatnot, like, I mean, I'm on Facebook. Sometimes I look at a cat video here and there. I don't think the IRS is gonna, come with your torches or whatnot. But again, it's the purpose is the intention and the purpose is business use.
Great, thank you. And Dr. Michelle sharing, I think I made a big oops. I had contractors work with me last year and have not sent them a 1099. What should she do?
Well, you're still able to file your 1099s. A little bit late. They were due on. Oh yeah, thanks, Elizabeth. I saw your infamous SS8 form. They were due on 2 weeks ago on January 31st, and but you're still able to do it. There are some penalties. I would say file, and if there's gonna be any penalties, let the IRS send you a letter saying that you owe the money. And let me see if I can provide you with a service.
You'll also want to do a 1096. We can help with that service, not going backwards, but if someone needs that, I can find them someone to do that. But honestly, economically, you could go to Staples and they come in like 100 pack, right, of 1099s.
Yeah.
You can fill that out, but the important part is the 1096 that is giving the government the same dollar amount, so they can match it back up to that individual.
So what I'm doing too right now, hang on, let me find the chat thing. There is a service called Track 1099. Let's see again.
You found that, Aldo, too. On the same note, if we didn't receive a 1099, should we still count that revenue, even though we haven't got one yet from the
Yes.
work with?
Yeah, absolutely. Just because you do not get a 1099 does not mean that you are supposed to forget that income. The requirement is any money that you receive, you're supposed to declare it. Well, regardless of form of payment, you're supposed to report that, and obviously the same deal, the expenses as well. And again, if you're gonna pay somebody in cash, there's people like, oh, I'll do this for cash. Remember, that's gonna be the first thing they're gonna disallow, because the IRS is like, you seem like a nice guy, but somehow you need some documentation and support. So if you're gonna pay cash, get an actual bill of sale, an actual invoice or receipt for services rendered that looks official, not something that looks like a squiggle line and stuff like that. So do that. So I did add the 1099 track1099.com. That's a great service that I've used in the past. You don't have to go to Staples and do that, but if you want to go to Staples and do it old school, rock on.
And moving forward, right, we have resources. And I have a question. Now, does the payment of a 1099 contractor then in any way tax deductible?
Yeah, no, I mean, it is tax deductible. So what you're doing is you're reporting to the IRS you pay a third party, right? That's basically, and the 1099s are reserved. And again, there's a whole different conversation, but are usually for smaller business owners, your sole proprietors, even you have an LLC, but operate for tax purposes a partnership or a sole proprietor, they got 1099s. But if you're an S corp, or those people are, they have an S corp or a C corp, you do not need to issue them a 1099.
Again, on that same theme, and Lily, you might have to provide a little bit more context, but Lily's asking, would we need to do 1099s for hired labor like HVAC techs?
You say hire labor.
And Lily, I'm not sure what your business is. So it's one thing to have, work done on your building, but it's another if you're maybe hiring labor to help as a subcontractor for your business, right?
Or you bought the equipment and they installed it, or did they just provide service?
They paid someone to install a split level.
Yeah, so we paid for
No,
the,
but did they sell you the split level? I guess. Did they sell you the equipment, or they just came in, you bought the equipment separately, and they just came in to install it?
they sold us the equipment and installed it.
Yeah, in most instances, you don't. I mean, if you're buying a product, yeah, products, materials, and stuff like that, usually it's for services where you're looking at 1099s.
Okay, but like, so like if a plumber came in and serviced something that was already here, would that be a 1099? Like if it. does-
Yeah, but again, remember, it's how you pay them, right? So you pay them with a credit card,
Right,
yeah, more than, I mean, and it's over $600, then you don't have to do anything, because now there's this year the new reporting standards for third-party payment processors is kicking in, right? But let's say you pay them with cash or a check or Zelle, then you do have to issue 1099.
okay,
And
I
Dr.
know it's never clear with the IRS, and they've been delaying these rules with third-party payment processing. So
Dr. Michelle, you had a question?
Yeah, I just wanted to clarify what I thought I heard. I thought I heard Aldo say that if you had an S corp, that you didn't have to give them the 1099. Did I hear
No.
that correctly?
well, you can still get basically you can give them a let's say, for example, I am your vendor, right? And you ask me for a W-9. You have to ask for a W-9 because that's the only way to find out how I'm paying taxes. And you hire me, you ask me for a W-9, which that's a very good for all of you guys. Collect the W-9 before you make the payment. After you make the payment, it's very hard to get W-9s.
Yeah,
But
I did that.
you got my W-9. You see that I report taxes as an S corporation. You do not have to issue me a 1099.
Okay, now I got it. I thought if I was an S corp, I didn't have to give them, but they're not, so I still have to give them. I get it.
Right. It's the vendor. The vendor is the one that is that's going to help you make
S-corp.
that decision. Mhm.
Okay, great. Thank you so much.
Great questions.
Welcome.
Thank you so much. Wow. Thank goodness for people like Aldo. Great. Wonderful. Thank you so much for your time today, everyone. Again, I did record this session. It will go on the local learning lab. You will be hearing from me. I will be sending out an email with the link. We also got some really good links in the chat today, so I will make sure to include those as well when I send out that email. I hope you all have a fantastic day, and we'll see you at our next workshop. Thank you so much. We'll talk to you soon.
Thank you, guys.
Wonderful.
Bye, everyone.
Thanks.
Very informative. Thank you.